Nigeria's inflation rate rises to 34.19% in June 2024 amid rising food costs, says National Bureau of Statistics. Banks bolster economic growth as private sector credit soars by 30 trillion naira. Central Bank of Nigeria's intervention swells foreign exchange turnover to $1.3 billion. Oil extends losses as dollar strengthening following Trump attack. Asian markets mostly slip as investors assess China GDP miss and assassination attempt on Trump. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Let's bring you up to speed with business development. Latest data from the National Bureau of Statistics, NBS, says Nigeria's inflation figure has reached a new high, hitting 34.19% for June 2024. This is an increase of 0.24 percentage points when compared to the inflation figure for May 2024, released by the NBS. Looking at the movement, the June 2024 headline inflation rate showed an increase of 0.24 percentage points when compared to the May 2024 headline inflation rate. The NBS said in its Consumer Price Index, which measures the average change over time in the prices of goods and services consumed by people for day-to-day living, released on Monday. On a year-on-year basis, the headline inflation rate was 11.40 percentage points higher compared to the rate recorded in June 2023, which was 22.79%, according to the NBS. The headline inflation rate year-on-year basis jumped in June 2024 when compared to the same month in the last year. Now, other stories. Banks' loans and support for the private sector have risen by about 30 trillion naira in a sustained effort that has seen the banking sector emerging as the backbone of the country's economic renewal. Latest data from the Central Bank of Nigeria, CBN, indicates that credit to the private sector rose by 65.9% to 74.31 trillion naira in May 2024. Compared with 44.79 trillion naira recorded in the same period of 2023. The growth in lending and support to the private sector underlined the resilient balance sheet of banks and banks' response to the Apex Bank's push for increased lending to boost economic activities. CBN Governor Olayemi Kadoso said the ongoing recapitalization will strengthen banks further to drive the $1 trillion national economic target and support stable growth in the economy. Additional capital will enhance Nigeria's banks' capability to support massive economic growth and play competitively globally. The Nigerian Autonomous Foreign Exchange Market, NAFEM, witnessed a remarkable surge in total foreign exchange turnover, reaching $1.03 billion last week. The significant increase was largely attributed to the strategic interventions by the Central Bank of Nigeria. Directed at the banks, the figure represents a 40% rise from the previous turnover of $740.92 million, according to the data from FMDQ. This milestone marks the first time weekly FX turnover has surpassed $1 billion since the first week of June 2024, when it reached $1.05 billion. The Director of Financial Markets at CBN, Omolara Duke, disclosed that the Apex Bank had sold $67.5 million, $55.17 million, and $122.67 million to 27, 19, and 46 authorized dealers on Wednesday, Thursday, and Friday. The CBN further urged all authorized dealers to ensure that foreign exchange purchases from the bank are exclusively used for trade-backed transactions, which must be reported within 72 hours. Dollar sees safe haven gains. Sliding yen stays on intervention watch. How much is the Naira Exchange Consumer Protection and Commission says market associations across the 36 states and the Federal Capital Territory are responsible for the persistent hike in the price of food commodities. Acting Executive Vice Chairman FCCPC Adamu Abdullahi stated this at a one-day webinar with non-governmental organizations and consumer protection groups with the theme Collaboration for Competition and Consumer Protection, attributing insecurity as a major problem in food production. The FCCPC boss says some individuals in the market have become dictators in the supply and distribution chain of food products into the market. He noted that a market survey done by the Commission in collaboration with the National Consumer Advocacy Group discovered that increase in prices of food was caused by faulty vehicles and diesel prices, amongst other factors.
It's been done. But then it's one of the things that are also making food prices high. It's a very long and tedious process, and that is why it seems as if we're the only government agency that has the mandate to advise government to fix prices, and even that is for a period of 6 months, not more than 6 months, and it will be based on empirical data. That empirical data is what we have been working on. We have to have very, very convincing and sound reasons.
And now to commodities market. Let's take a trip and see how prices are faring. And now let's head to capital market, where Olayinka has a summary of the numbers in last week's trade.
The index and market capitalization depreciated by 0.35% to close last week at 99,671.28 and 56.441 trillion naira. A total turnover of 2.765 billion shares worth 85.230 billion naira in 40,796 deals were traded last week by investors on the floor of the exchange. The financial services industry led the activity chart with 1.892 billion shares valued at 24.326 billion naira in 21,447 deals, contributing 68.42% and 28.54% to the total equity turnover in volume and value. The agriculture industry followed with 388.212 million shares worth 1.539 billion naira in 1,865 deals, while the third place was the utilities industry with a turnover of 121.608 million shares worth 50.613 billion naira in 627 deals. Trading in the top three equities were Fidelity Bank PLC, Ella Lakes PLC, and Guarantee Trust Holding Company PLC. A total of 36,257 units of ETPs valued at 4.415 million naira were traded in 97 deals. For bonds, a total of 44,588 units valued at 40.993 million naira were traded last week in 20 deals. On summary of price changes, 34 equities appreciated in price during the week, 38 equities depreciated in price, while 82 equities remained unchanged. Olayinka Ojo for Business Express.
The Asia market mostly sleep as investors assess China GDP miss. Maria is standing by to bring us up to speed with global stock market update. Maria, is over to you. Let's have the numbers.
Thank you, Musa. European stocks followed the trend set in South Pacific overnight, where markets mostly fell as all major bourses and the majority of sectors traded in the green. Utilities led losses, slipping 1.20%, followed by basic resources, which lost 1.19%. The DAX slipped 0.33%. We have the FTSE dipping 0.33%. The CAC followed this trend at 0.62%. In Asia market, China's economy grew 4.7% in the second quarter, missing expectations of a 5.1% expansion forecast by Reuters and lower than the 5.3% growth seen in the first quarter. We have the Nikkei sliding 2.45%. We have the Shanghai Composite in green at 0.09%. The Hang Seng Index was in red at 1.52%. With Donald Trump's assassination attempt on everyone's mind elsewhere in the U.S., investor attention is shifting to second quarter earnings report, which could be the catalyst to extend the market's rally to new records this year. Futures tied to the Dow Jones Industrial Average was trading in the green at 0.56%. We have the S&P 500 Composite at 0.44%. The Nasdaq Composite mirrored this at 0.50%. From Africa markets, we have South Africa JSE Top 40, which was at 0.34%. We have Tunisia's Chin Index at 0.11%. Namibia All-Share Index was in green at 0.04%. And we have Ghana, which was also in green at 0.13%. That's the summary of the global market, and it's back to you, Musa.
Well, quite an optimistic day for stocks there. I can see only South Africa is in red. Well, thank you, Maria. Well, this is where we end today's edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. We inform that all previous episodes are available on YouTube on the NTA channel. Thanks for watching. I am Musa Abubakar.